Investors continue to show excess love to the Nairobi Securities Exchange on this day, Thursday, February 13th, ahead of the International Lovers' Day, which is Valentine's tomorrow. Why do I say this? Safaricom has traded 13.17 million shares over the day. This is slightly higher than what it traded yesterday, which was 12 million shares. Equity Bank, 6.2 million shares. KCB, 3.51 million shares. I really wish somebody could love on me this much. Just buy me 12 million Safaricom shares at about 31 and a half and give it to me. And I promise you, it will be a Valentine's Day each and every single time at markets today. But that said, fixed income markets. What are we doing with treasury bills? What are we doing with treasury bonds? We are in studio with Michael, who is a senior investment consultant at Cytonn. Before we took the break, Michael, you have differentiated T-bills, T-bonds, and the case for fixed income. Now we are looking at the 15-year and the 25-year reopen issuances that are out there issued by the Central Bank of Kenya. You're helping us understand what should my investment considerations be if I want to give money to the bank, to the government of Kenya over a 15-year or a 25-year horizon. What are the key things I must bear in mind when I'm making this investment?
First of all, you need to consider the amount in which you are investing, especially in buying the paper, considering that investing is subject to disposable income.
Okay.
How much do you have and how much are you willing to commit into this?
Can you afford it?
Yeah. Can you afford it?
Can you afford
Number
to
two,
invest?
you should consider the period of investment.
All right.
Because the longer the period, therefore, it means that you're going to leave all the opportunities you have at your disposal for all that period of time, only for you to get the return that you've agreed to take from government.
That's a very good point. Because would I then, sorry to interject, would I be asking whether I'll ever see anything better than 13.7 in 13.4% in 25 years.
Markets. Exactly.
Or all the other markets.
And you know that one takes us back to the definition of what an interest rate is.
Exactly.
What is an interest rate? An interest rate simply gives you, the amount of opportunities that you are going to get vis-a-vis the amount of opportunities or the number of opportunities you're missing out there. For example, if you buy a treasury bill that is going for 13% or let's say 10%, it means that out of the possible 100 opportunities that you have, risky and non-risky, you are able to be accorded 10 of those opportunities. But you're missing out on the 90 opportunities out there, which are existing, and some of them are risky and some of them are not risky.
Wow.
So it means for you to commit yourself for a period of 20 or 25 years into a government paper, and this paper is giving you 13%, it means that it's granting you, it's guaranteeing you only 13%, but you're missing out on the other possible 87% of opportunities out there.
Are you telling your investors then to go for 25-year at 13.4?
Now, we normally recommend, again, it comes to the needs analysis, a process that we normally take after we've gotten the investor. We ask him, what do you want? When do you want your money back? What are your needs? And according to the needs of these clients, then you can be able to address.
What if I don't know if this is something that is available to us? You'd probably be better placed to answer this.
Yeah.
Can I take all my pension today? Because I know companies make a contribution for pension, and then the individual also makes a contribution. It goes, I could make a 5% contribution and the company matches, or I could make a 10% contribution, the company matches. It's not something that is regulated, but it's deemed as a benefit that the companies give you as an employee. Can I take all that money and just give it directly, for instance, to the 25-year paper instead of going through a money manager? Because money managers have been losing people money.
Yeah, now for pension contributions, remember pensions are mandatory.
Yes.
And the pension space is a regulated space.
There is the pension that is NSSF, and then there is the pension that is
for the private providers, for the tier 2.
Okay.
Now for the tier 2, there's also regulation in the sense that they have a regulator who's RBA, and the underlying investment classes where they're going to invest are also outlined clearly by RBA. However, it's good to know that RBA has given a substantial amount of percentage for allocation government securities, because investing with government is deemed as protected and your funds are protected in the sense that governments don't default.
Can
There's that
I-
perception that governments don't default.
Yes, but it's a
That's what I'm
perception
saying
that
they
has been tested and it has failed
do. It
miserably.
has failed.
Do you have confidence in Kenya as a sovereign state in the year 2063?
You can't really, I can't
No,
really
Michael,
be able
you
to
can't-
project
you're
up
an
to
investment
26.
consultant.
Maybe ask me for now. And for now, what I'll tell you, this is the best time to invest
In the bonds.
in the bonds.
But this is a
and even in-
15-year paper and 25-year
Sure,
paper, Michael.
sure.
What then, I mean, how should I look at the year 2063? Because the 25-year, the date of maturity is marked 2063.
Now you're looking at the independence and also the evolution of our institutions, especially the financial institutions, and we're looking at the Central Bank of Kenya, the kind of policies they're coming up with. You're looking at the regulatory and also the legislative,
Yes.
policies which are coming up, especially in regard to finance and issues to do with money. We've seen that government has really remained resilient in terms
Okay.
of making steps towards fiscal consolidation that is likely to put the country in a sustainability level.
So at least in the medium term.
So in the medium term, all is well.
All is well.
Yeah.
Okay. All right. At least I'm encouraged because
Yeah,
if
in fact,
nothing-
actually, you saw the other day that Kenya was able to be, to move a rank higher in
Yes.
Kenya in terms of investor confidence.
Okay.
And we were ranked position 4 previously from position 5.
So at least in the medium term, at
Yeah.
least by the year 2030,
Yeah.
we are okay. We're on an okay trajectory. There could be some things that could be right, could be wrong, but we'll still be here.
We'll still be sailing.
Okay, at least that gives me a bit of comfort because if I was to put my year in the 25-year at 13.4, at the very least, after 7.5 years, I'd have gotten my principal back.
Yeah.
If nothing else. So
If
that's
nothing
that's
else.
not too badly off.
It's not.
And what about I guess it's the same way to look at the 15-year paper.
Yeah.
But then how do we look at being compensated for inflation in that duration?
Now, for inflation, what to look at is the rate currently, and in terms of the economy, how the economy is performing, and what are we likely to see. We gave a projection of around 5.7
Yes.
GDP growth this year, and we're looking as well at the initiatives government is making. We saw the other day that we are able to get a debt limit from IMF. It's another breath of fresh air. Therefore, in the midterm, all is well.
All is well.
Yeah.
But then how am I compensated? And I mean, I'll keep coming to the 25-year and the 15-year.
Yeah.
And I'm trying to put myself in a situation where perhaps as Mbitha I had 20 million that I just do not need. And I'm trying to get to the decision. Do I give it to the government for 15 years or for 25 years? But how do I think about my purchasing power?
Yeah.
What will my 20 million look like in, I'll keep wait to 2063. I know you don't want me to go there, but
Now, from
I
a
have to go
financial
there.
advisory perspective, I'll
Yes.
always advise you to diversify, because I know you don't have to invest all your, all your
Okay.
money in the public,
All
in the
right.
public assets.
All right.
You can as well consider the alternative assets,
Okay.
which are still better yielding.
What are
because-
alternative assets?
Yeah, generally when you look at fixed income, you can as well classify fixed income, other than looking at it in terms of government issued or non-government issued, you can as well look at it in terms of the underlying asset classes where the funds are invested. You can be able to see there's some fixed income products which are publicly offered in the public markets, and where the funds are invested in the public assets, and you can be able to see there's some, fixed income products,
Yes.
which are whose funds are invested in the alternative markets,
Okay.
and therefore they are considered privately offered.
All right.
And when you look at the publicly offered and public markets, you're seeing products like money market funds.
So what are money
Banks,
market funds?
fixed deposits.
What rates of return are we getting
In terms
from
of money market funds, money market funds is a short-term and a product which is meant for short-term and risk-averse investors.
Okay.
People want to invest for a short period of time, but be able to enjoy, the good return. And the concept of money markets operates in the sense that you collect funds into a pool account in a custodial bank, and the funds are now allocated into the respective underlying investment classes.
So in other words, instead of going to the year 2063
Yeah.
at 13.4,
Yeah.
I could actually put some money with, say, Cytonn or any other money market,
money market.
because I can get it out before then.
Anytime.
Okay.
So there's liquidity, and also there's principal protection, which actually mimics whatever banks are doing. And we are able to see that money market funds are becoming, preferred as a, as a way of investing funds for a short period of time, and you're able to get a high return.
What return is the Cytonn fund giving?
Currently, the effective annual yield we're seeing from the Cytonn Money Market Fund, you've seen that this year we've hit 11%.
11%.
Yeah.
And what is the cost of investing in this fund?
We normally, there's a 2% management fee.
So 2%.
However, it's good
okay.
to know that the 11% is net of that management fee.
Oh, it's net of that.
Yeah.
Okay. And how does the management fee work? Does it work anytime I put money, I'm charged 2% to be part
Now,
of this
what we normally
vehicle?
do is that we charge, the management fee at a per annum rate.
Okay.
And it's charged on the whole pool.
No, however, so if I've put in like 100,000, it would be 2% of the 100,000,
Yeah.
and then I'll get a return of 11%
Of
on that.
11%.
Okay, fantastic. And then you were also talking about alternative assets. Alternative assets would have, what would alternative assets typically be made up of?
Yeah, for the last for the few, we've been able to see that there's some researches which have been done, and we've seen that alternative assets have been able to outperform public assets in terms of return. We've seen that what alternative assets entail is investing money in in asset classes whereby you can be able to get the best possible return,
Yes.
at the same time the lowest risk.
Okay.
Yeah.
Fantastic. I think we are coming to the tail end of our show, and I think you have brought out very interesting. So it's either I go directly and invest with the government of Kenya,
Yeah.
through the Central Bank of Kenya. But if I do a 25-year, I have to wait till the year 2063 because there's no flexibility of getting my money out. Or conversely, I could take a money market, a Cytonn, or any other. There are many providers out there, and if I put my money in and I need to get it out, I could be able to get it out.
Exactly.
That's a way of looking at it. So today, when we discussed the fact that the Central Bank of Kenya is now creating a platform for distribution for the retailers, does that threaten your business as a money market manager?
Not really, it complements.
Okay.
Actually, the biggest challenge we've been having is that the masses, the people, especially the mass market, has not really been able to get these structures of investing. Therefore, investing in the treasury bills or the treasury bonds via the mobile platform is an added advantage because it gives you exposure, and therefore we're going to have more people, especially the low and middle income earners, getting awareness about these products.
Okay, so
therefore,
then it
it's a
actually
plus
helps
to the
your
industry.
business.
Yeah.
Okay, fantastic. Thank you so much for joining us. We've
Thank you.
come to the end of our show. I don't know if there's any parting shot you would like to leave us with.
Not really. What I'd like to say is that this is the best time to invest.
Okay, in which class, in which assets?
Across board.
Really?
And it's
Equities
good
and
that you
fixed
work-
income?
Yeah, it's good you diversify because it depends on the nature of the investor. If you tend to have low risk tolerance, you can be able to commit your money maybe in money market funds as compared to investing your funds in the stock market.
Okay.
Yeah.
Thank you so much for your time, Mr. Michael Obaga.
Thank you for
We've
having
come,
me.
All right, to the end of the show. Tomorrow, interestingly, we are having a show that talks about just basic investing, and it's called Ask Mbithe. And I want to ask you, Michael, a question. Have you read The Intelligent Investor?
Yeah.
You have read it. Thank you. Then I will actually tag you on that because I'm actually rereading. I'm not rereading it. I'm reading it for the first time, and I'm on the space where it says you need to diversify your portfolio. The question is, what is the right allocation mix depending on what asset class you are looking for? So, Seth, thank you so much for the insights that you have shared. Michael is a senior investment consultant with Cytonn. He's telling us, not in not so many words, rather than give your money to the government of Kenya till 2063, give it to him because if you need it before then, he will be able to give it back. The only question is, do you believe him at 11% or would you prefer to give it to the Central Bank of Kenya at 13.4%? We look forward to your answers. Thank you so much for your engagement, and I hope you enjoy your Valentine's Day. If you ask me what I want, I only want 13 million shares of Safaricom, and I'm willing to take you on that if you ask me how to buy them and where to buy them from. Thank you for joining us this afternoon, and good afternoon.